Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 20, 2021. I want to talk about top consumer cyclical stocks. With that, I got a couple images here. First one is NIO, a very good luxury car maker based in China. Then we got Farfetch, they're into luxury retail. And also they got some second-hand stuff also. And last one is Jumia. This is also a very good play. They're in the South of Africa area, and they're very good into the e-commerce itself. So with that, let's jump in and get started. First, let's look at sector performance. As you see here, we got all the sectors from basic materials all the way to utilities. And if you look at 5 years, clearly, technology has done very nicely. And next is consumer cyclical, and energy has not done well in a 5 year time frame. But as you go into 1 year, you will see that trend is a little bit shifting more towards consumer cyclical and basic material, and a little bit into financial services. Technology is a little bit weaker as we go into 1 year time frame. And then as you go into 6 month, 3 month, and 1 month, clearly in a 1 month time frame, consumer cyclical is negative, most negative as you can see here, and technology is also negative, and utilities also negative. And with that, one of the main thing that we have to look at is really when a sector goes too high, then you got to watch out a little bit. But when the sector is down, then you can look at best players in the sector and invest in them. So that way you're not paying too much for it. So it's one way to really buy good quality stocks at a discount because the whole sector is going down. But you got to be careful. You don't buy when the knife is falling down. Instead, you kind of look at stabilization point and then you buy slowly. So with that, if you look at consumer cyclical, we got famous stocks, popular stocks like Amazon, Alibaba, Home Depot, Nike, McDonald's, Pinduoduo, and so on and so forth. All great. These are big cap stocks, and we will also look at the big cap, medium, mid cap, low cap stocks, so that we get a very balanced view. So with that, let's jump in here. If you look at big players in this area, we have Amazon.com, clearly a huge player in the consumer cyclical sector. Then we've got eBay and Etsy. All of them have done nicely, but if you look at Etsy here, it's done tremendously well. But Amazon and eBay, they've done okay, but not as good as Etsy. And then we got consumer cyclical home improvement area. Here we got Home Depot and Lowe's and some other players. Clearly, Lowe's has done very nicely, almost double the performance of Home Depot. Then we got restaurants, and these guys have done okay. Especially if you look at Darden, they've done very nicely. I think this is again a recovery play as more and more people get COVID shots. They will venture into restaurants, but overall, I think this sector is a little bit muted performance, not great performance. But I think this is one area that will come back as more and more people get COVID shots. Then we got auto manufacturers. Clearly, Tesla had done very nicely, and even GM and Ford they've also done nicely. Now we have to watch out a little bit because there is a semiconductor shortage. Many of these companies have halted their production lines, so we got to watch out how they will play out as we go forward. But clearly, these guys have done very nicely, and I think a trend might continue as we go forward because all of these guys are focusing on EV, electric vehicle play. Then we got consumer cyclical travel services. As you can see here, all the travel services, at least two of the first one, Booking Holdings, a little bit muted of performance here, 44%. This used to be a high flyer back in 2019. I think these guys will do well as economy recovers. But if you look at Carnival Cruise, Expedia, Royal, and even NCLH, Norwegian Cruise Lines, they all have done very nicely in a 1 year time frame. There is a big expectation that these stocks will continue to do well as more and more people travel. I think with these cruise lines, especially because they've fallen off so badly, in 2020, they're basically recovering nicely at this point. Then we got apparel. Apparel is a little bit, muted to some extent, at least first two of them. But LB and Gap, they've done nicely. I think especially L brands, they've fallen off so badly. They're recovering very nicely now. Then we got specialty retail, mainly if you look at some of these auto plays, they've done okay, not great. But as you look at Tesco, TSCO, they've done very nicely. I mean, Tractor Supply, they've done nicely, and so did GPC. Now, if you look at residential construction, I think they've done pretty okay. All the big players like DR Horton, Leonard, they've done very nicely. Then, if you look at resorts and casinos, I think they've done okay. Exception of Las Vegas Sands, it's a little bit muted performance, but otherwise, MGM has done very well. And then we got packaging and containers. They've done pretty okay. I think Westrock has done tremendously well, and so did International Paper, as well as Sealed Air C. Now, then we got specialty retail. Again, Alta has done very nicely, 49%. But if you look at some of the other players here, GPC, they've done very nicely also. So with that, let's jump into a little more details and see what stocks we should really focus on more now and take it from there. So from a top consumer cyclical stocks here, I've highlighted few of the stocks here, but before I jump into the details, the way this chart is organized is I got the stock here, the ticker symbol, I got the price, market cap, sales and sales growth. I pay very close attention to sales and sales growth, and then there's a gross margin. It's very important to have nice gross margin. And then we also have 1 day, 1 week, all the way to 1 year performance, and also look at how much they're off from their 52-week high. This is again very good to understand, is it a good time to buy or not. And we also have price to sales ratio. If it is expensive, like for example, if you see here, Tesla is expensive, Neo is also expensive, so is Pinduoduo. So you got to watch out when stocks are a little expensive, because there is a tendency that if they're too high, it might take some breather. So with that, I've highlighted few stocks here. These are the ones with good revenue growth, accelerating, very good revenue growth and nice gross margin. So with that, let's look at few of these stocks. First is GameStop. GameStop has done very nicely last year. As you know, it's a meme type stock. A lot of folks in Reddit have played this stock very nicely, and they've done tremendously well in 1 year, 3,739%. Huge performance in last 1 year. So with that said, I think probably it's not safe to assume this performance will happen again. But now they got a new CEO. I think they might do okay, but I don't think they will hit this performance next year. Then we got Neo. Neo, as you can see here, they've fallen off 48%. It's a solid player. I can see this stock going up, a little bit, because this is a good company. They're into EV play, which is an emerging area. We have got a couple more players here like Apparel, L Brands, and Gap. They're 10% and 13% off. They're a little bit negative, as you can see here, from a 1 year sales, but L Brands is positive from a quarter over quarter. But I think we should probably look at some of these stronger players like Tesla, Caesars, Tapestry, Penn National, Farfetch. They all have positive growth, as you can see here, positive revenue growth, and they also have good gross margin. So in this pack here, I think Tapestry has got a best gross margin here, and even Caesar, it's also okay. Then we got Farfetch. I think this is stock has fallen off very badly. Now they're trying to recover. I think it may be a good one to buy because they've fallen off so badly. Now they're recovering a little bit. Now we got Carvana here. Carvana, I think they're doing well, but I'm not too sure if the population is waking up to buying a car from vending machine. I think they're doing well, but this growth, I'm not too sure if they can sustain long time. But I think overall, as you can see, a good revenue growth. We'll see how it does. We got a couple more players here. MGM, I think they're almost 6% off of 52-week high. It's a good player, but right now the revenue growth is negative, as you can see here. But I can see this company doing well, and more and more as more and more people get shots. Then you got Magna, Westrock, and Ford. All of them have done nicely, but sales growth is negative at this point. But Ford, as you can see here, it's turning positive from a quarter-over-quarter perspective. And Westrock is also not too bad. Now we got Peloton and Etsy. Both of them got positive sales growth, as you can see here. Very nice sales growth, and they also done nicely. And they are 41 and 31% off of 52-week high. I think at this point, I would think maybe Peloton is a good play. You could buy some. I think they will do well. Etsy is also a good play. It's a little expensive, as you can see here from a price to sales perspective. I would wait for this to cool off a little bit. As you can see here, they've done very nicely in 1 week, 2 week, even 1 day time frame. I would wait for this to cool off a little bit there and then buy. Expedia and Expedia has done nicely. Right now, revenue growth is negative as market recovers and the economy recovers. I think this company can do well. Levi's has done nicely because a lot of people are wearing Levi's and casual. So stock has done nicely. I think they've fallen off a little bit in 1 month time frame. I think this can rebound nicely. Then you got Pinduoduo here, a little expensive here, but I think it's a good stock. It's fallen off in a 2 week, 1 month, and even 3 month basis, and even 6 month basis. I would buy this on any weakness and hold it for a while. Next is International Paper. They've also done nicely, 106%. It's a steady Eddie type stock. I think it's good to buy on the weakness and hold it. Next, we got a couple more here. We'll look at Westrock, again a solid player. This company trades very wildly, especially around the earnings. As you can see here, they've done nicely, 92% in 1 year, and I think they've done nicely in a 1 week, 2 week basis. I think it's a great stock. So we got a couple more here with the Pulte Homes, Crown, CCK. I think all these companies, as you can see here, they got very nice gross margin and also nice sales growth and also good 1 year growth here. So you can run through this. I got a couple more here I've highlighted. Just take a look at this. I think you could buy some of these players, especially look for stocks that have fallen off, like DraftKings as an example, and now they're trying to recover. That could be a good one to just look at such trend and see if the companies are recovering in a shorter term time frame. That could be a good way to play. Next, let's look at some of these mid cap stocks. If you look at mid cap here, we got Jumia. It's again a e-commerce play, $27 stock. I think it's done very nicely, 543% growth in 1 year. And Ostock.com, this is one of my favorites, $77 stock. It's done tremendously well, and now I think they're trying to go up now. So we got a couple more here. Crocs, Yeti. Yeti is again one of my favorites. I think they've done very nicely. Nice sales growth. It's become a very good brand for the millennials. And we got a couple more here. Even Callaway Golf is also one of my favorite. As more and more people are golfing, I think this company is doing it very nicely, and they also have a good gross margin here. Next, let's look at mid cap continued. Camping Gold is a good story again. I think they've done very nicely, 141%. As you go through this again, I think even Skechers is nice. Shake Shack is also good. KB Home again, nice growth here, 59% in 1 year performance. And now we are going into a little bit lower performance here. I would not touch many of these players unless they are kind of bouncing off nicely. And let's look at one more here. So we got small cap players here. I love small cap stocks. Some of these players like Big Five Sporting Goods as an example, it's done tremendously well, 1,959% in 1 year. As you can see, they got a little bit weakness coming their way. I would wait for this stock to cool off a little more and then pull the plug. Blink charging, I think they've done tremendously well, but as you can see, they've been cooling off a little bit. It may be okay to wait for a little bit more cool off. As you can see, they've done very nicely in 1 week time frame. I would wait for it to cool off a little bit, especially it's a expensive stock. Price to sales ratio is very high, 100 plus. And as you look at this, I think on even Purple Innovation is a good one. They've done 134%. You could buy slowly. As you can see here, they've fallen off in the 3 month, 1 month chart, and now they're trying to recover slowly. Real is also a good one, $15 stock. I think stock has fallen off pretty badly. Now it's trying to recover in a 1 week and 1 day time frame. So I think overall, if you focus on the solid players with nice sales growth and nice gross margin, I think you can really make it in this market. And also look for the stocks which are fallen off tremendously, and in a short term like 2 week, 1 week, they're trying to recover even 1 day. That's the time you can pounce in and buy some and hold for a long time. Many times you should not be chasing the stocks that are going up so highly, but rather look at good stocks in a pullback situation and buy those stocks and hold it. So with that, thank you very much. Happy investing. Please subscribe.